Now let us go ahead and take on the next example. It's a very old CMA inter-examination question which has 4 parts. Even this is a possible MCQ for 8 to 10 marks. Okay.
Yes.
Now let us go ahead and take on this question. It has 4 parts. They given the data regarding 4 factories, 4 manufacturing units. Now let us read the data for each plant and take up the solution, right? Yes, ma'am.
C company prepares a cost, volume, profit, budget analysis for each plant as per the details below. Plant A. Plant 1.
A.
Yeah, plant 1.
1.
Profit plan for plant 1 shows annual budgeted fixed cost 12 lakh.
Okay.
Variable cost 8 lakh 40,000. Sales value of production 22 lakh. Allocated head office budgeted fixed cost 3 lakh and 20,000. You are asked to prepare an analysis indicating the break-even point before and after cost allocation. Explain why the break-even points change in rupees is greater than the allocated amount.
Okay, now listen to me. So it is given that they given the sales expected for this particular manufacturing plant, right? They are given the, I think they are given the contribution, right? Or they are given the variable cost.
They are given the variable cost.
Okay, you all know sales minus a variable cost is equal to contribution. You also know contribution divided by sales into 100 gives you the PV ratio or contribution to sales ratio. And you also know that it is a break-even sales is a fixed cost by PV ratio. Now you got to work out 2 numbers. One is taking rupees 12 lakh, which is a fixed cost incurred for the plant specific, right? And also, you should find the break-even sales taking a fixed cost of rupees 15 lakh 20,000, which is 12 lakh plus the allocated head office expense of 3 lakh and 20,000. Shall we?
Yes.
Now let's go through the solution. Here, you cannot calculate the break-even point in units because they haven't given the data regarding selling price or variable cost per unit. You cannot find the contribution per unit. So let's walk into the solution. Yes.
So sales value given 22 lakh, variable cost 8 lakh 40.
22 lakh is it?
Yeah.
Not 22 lakh. Okay. Sales, variable cost.
8 lakh 40,000. So
Contribution.
contribution is 13 lakh and 60,000.
Now what is 13 lakh 60,000 upon 22 lakh into 100?
61.82% PV ratio.
And that is a PV ratio. Now the break-even sales, you know the formula, right? Divide your fixed expense rupees 12 lakh by
61.82%.
How much you get?
19 lakh 41,119.
You saw you had to sell something more than 12 lakh rupees, right? Because PV ratio is only 61.82. So you got to sell rupees 19 lakh, how much?
19 lakh 41,119.
Then after allocation is going to be 15 lakh and 20,000, right? So 12 lakh plus 3 lakh and 20,000.
Yes, sir.
Divided by 61.82%, how much?
24 lakh 58,751.
The difference if you take, it's more than almost 5 lakh, right?
Yeah.
Increase. Yes. That's it?
That's it, sir.
Now that is supposed to be the sales to be made to break even in case a head office expense is allocated. Got it?
Yes, sir.
Now let us go ahead and read the
Plant B.
for plant
2.
Plant 2.
Plant 2 produces a product that sells at rupees 40. It costs rupees 42.5 when 15,000 units are produced. At a production level of 20,000, the cost per unit is 38.125. What is the break-even point in rupees and in units?
Both. Now please check this. You all know this formula. This formula is very, very, very popular, right? It is more popular than our Prime Minister. Fine. So in cost accounting, restricted to cost accounting, this formula, okay? You know the formula change in cost by the change in volume is your variable cost per unit. Now tell me, when you produce a 15,000 units, right? What is the cost?
15,000 is
42.5. Multiply and find the total cost.
6,37,500.
And what is 20,000 units into 38.125?
125.
How much?
7,62,500.
Now use a formula change in cost
Difference
by
is
change in volume.
1,25,000.
It's called the high-low method. Okay, you learn this extensively in cost accounting. So what is a change in cost, a difference in cost?
1,25,000 rupees.
Divide that by the difference in volume or change in volume, 5,000
5,000
numbers.
units.
You get rupees 25 is your variable cost per unit. Then how to find the fixed portion? You can take any level and find out. Let's take up level 1. So what is the total cost is 15,000 units?
6,37,500.
From that you minus a variable cost portion 15,000 into 25, 3,75,000. You get a fixed cost how much?
2,62,500.
That is the amount of fixed cost. Now you have been asked to calculate the break-even sales and also find what? And also find the break-even units. Now there are two ways. What he has done in the solution, he has first found the break-even sales and then found the break-even units. What are you going to do? You can do this way. You all know the formula for break-even point in units. Guys, as I speak, you can take a pencil and paper and jot down this formula, right?
Yes.
You should know this better a day before the examination. It is a fixed cost divided by CPU. What is the contribution per unit? Now tell me what is the fixed cost? 2,62,500.
500. So 1 minute.
Yes. Okay, so guys, I refer to the solution out there. Now what you can do, what he has done is he has found the break-even sales first and then found the break-even point in units. So what you can do instead, we can use a formula for break-even point in units first. We know the fixed cost rupees 2,62,500 numerator, right? Divided by, it is a 40 selling price minus a 25 variable cost. So I can say rupees 15 is a CPU. What is CPU? Contribution per unit. So if you divide 2,62,500 rupees by 15 rupees a unit, you will get 17,500 units as a break-even quantity.
Yes.
That can be calculated first. And once you know the break-even point in units, and that into rupees of 40 selling price per unit will give the break-even sales or the break-even revenue, which is 17,500 units times, that is into rupees 40, you get rupees 7 lakh. Is that fine?
Yes, sir.
What he has done, he first calculated the
sales.
Break-even sales, dividing the fixed cost by PV ratio, which is 0.375 or 37.5%. And then he divided 7 lakh rupees by 40 rupees a unit selling price to find the number of units. Got it?
Yes, sir.
So guys, now we shall go to the question and read the data regarding plant 3.
Yes, sir. Plant 3, budgeted income and cost estimates are as follows. Item and amount are given. Sales annual 10 lakh. Cost fixed 4 lakh. Variable 3 lakh. Head office expenses allocated 3 lakh and 50,000. Total cost 10 lakh 50,000. Loss 50,000. Sale of plant 3 is under consideration. What is your recommendation based on the data given? Justify your recommendation.
Okay, just go to the solution. First of all, you can go ahead and calculate the PV ratio and calculate the break-even sales that is needed, right?
Yes, sir.
Without considering the allocated head office expense. Is that fine? Now we know 10 lakh is a sales, 3 lakh variable cost, so 7 lakh is your contribution. What is 7 lakh upon 10 lakh into 100? 70% is your PV ratio or contribution to sales ratio, right? Then divide what? Fixed cost, how much?
4 lakh.
Only 4 lakh will be taken. Divided by 0.7, 70% PV ratio, you get your break-even sales as rupees 5 lakh.
71,429.
That is a break-even sales to meet the plant fixed cost without considering allocated head office expense. Is that fine?
Yes.
Now I will suggest not to close down the plant because what is the reason? This plant is giving at least a 7 lakh, a 7 lakh contribution, yes or no, positive contribution, right, to meet your 4 lakh fixed cost. Maybe it doesn't cover your allocated head office expense, right?
Yes.
Read what is given.
Conclusion, the plant is above break even and provides contribution to cover head office expenses. Closing will result in the loss of 7 lakh rupees contribution. Recommendation, do not close plant 3.
Is that fine? Now, because the sales are 10 lakh rupees, which is above the break-even sales of this particular plant without considering the allocated head office expense. Why? Even if this plant is shut down, head office cost will not reduce, right? It is not relevant for decision making whether to shut down the plant or not. So, therefore, you should not shut down the plant. Now, let's go back and go to the question and take data regarding plant 4. Yes, ma.
Plant 4 produces one product. The budgeted income and cost estimates are as follows. Sales annual 200 rupees per unit, rupees 20 lakh.
20 lakh is a sales, right? That means how many units are sold?
20.
If we divide rupees 20 lakh by rupees 200, that means 10,000 units are sold by the company. Then
cost fixed 7 lakh 47,500, variable 13 lakh 50,000.
Variable cost rupees 13 lakh 50,000. Now tell me, what is 20 lakh minus 13 lakh 50,000 variable cost?
6 lakh 50.
I can say 6 lakh 50,000 is my contribution from 10,000 units. Now tell me, what is a contribution per unit? You can divide 6 lakh and 50,000 by 10,000 units. You get rupees 65 per unit. That means what? 200 is selling price, okay? Variable cost rupees 135 per unit. Any doubt? Divide 13 lakh 50,000 by 10,000 units, right?
Yes.
135. What is a contribution per unit? Is 65 rupees. Okay. Then how much fixed cost, Renuka?
It is 7 lakh 47,000.
7 lakh 47,500. Have they given the profit number?
Head office expenses allocated 5 lakh 2,500.
5 lakh 2,500. Okay.
Total cost 26 lakh.
Okay.
Loss 6 lakh.
6 lakh loss after considering what? Allocated head office expense. Then
how many additional units must be manufactured in the plant in order to break even? What would be the profit pickup per unit before break even?
oh, very interesting. Above break, what is the profit per unit or profit pickup per unit? Okay, that's a nice question. Here we go. Yes.
Yes.
Solution, ma.
So first sales 20 lakh, variable cost 13 lakh 50, contribution 6 lakh 50. Then BEP 7 lakh 47,500 fixed cost divided by 0.325, which is 6 lakh 50,000 by 20 lakh.
You know, again he has taken only the fixed expenses incurred on the plant. He has taken the plant fixed cost, example, the plant manager's salary, and then the plant depreciation and so on, right? Do not consider head office, the expense only allocated, fine.
Yes.
Now, what is 7 lakh 47,500 divided by?
PV ratio 0.325
they found the PV ratio, which is 6 lakh 50,000 upon
to 20 lakh.
You will get what? The PV ratio.
0.325.
Okay, and how much you get break even sales?
23 lakh.
And divide that by
200.
selling price 200. 11,500 units. Again, same as plant 2, what you can do? If you want, you can first find the break even point in units and then the sales. Guys, take a calculator, pen and paper. Just do this for me, okay? Now, what is 7,47,500, Renuka? Take that number in your calculator. You want to type it? Okay.
No, I'm not typing.
No, not typing. Just take a calculator. That'll do. 7,47,500 divided by rupees 65 contribution per unit. If you do that,
we get 11,
you will get 11,500 units. It is same as what you did, right?
Yes.
Plant 2. And you have to sell these 11,500 units at rupees 200 each, which will work out to rupees 23 lakh as a break-even sales.
Yes,
Now, point to note. Please remember, the profit pickup per unit is nothing but Can you do this? Take a calculator, Renuka. Do this for me. What is a 20 lakh minus 13 lakh 50,000?
6 lakh 50.
That is my contribution, right? From 6 lakh and 50,000, from 6 lakh 50,000, you subtract what? Your fixed cost, 7 lakh 47.
500.
500. How much you
You
get?
get a loss of 97,500.
97,500. No, why 97,500? Because you are selling 1,500 less than break-even point. You understand?
Yes.
So what is the break-even point? 11,500 units. Currently, you are selling how many units?
10,000.
Therefore, you are selling 1,500 below break-even, right?
Yeah.
Break-even. Now, divide, what is the loss? You got 97.
500.
Divide that by 1,500 units.
You get 65 rupees.
You saw that? That means, remember one thing, this will happen even after break-even. Suppose you sell 13,000 units, Renuka, you will make a profit in such a way that the profit is what? Rupees 65 per unit above break-even. Always remember the profit pickup per unit above break-even will be same as what? Contribution per unit. I can prove that also. I'll tell you how. Take a calculator. What is 30? Let's say you will sell 13,000 units, okay? What is 13,000 units into rupees 65? 13,000 into 65. Very good. What is 8,45,000 minus 7,47,500 fixed cost?
You get 97,500 profit.
That is the profit by selling what? 1,500 units more than break even. Yes or no? Now divide 97,500 by 1,500. How much you get? 65 per unit. That's what they meant. Amazing question. Profit pickup per unit above break even is the same as what? Contribution per unit. And with that, we complete the solution, guys. Bye-bye.